Everyone, a very good morning, good afternoon, and good evening to all of you today. We have speakers and guests joining us from all over the world. It's a beautiful Saturday morning here at New York City, and we have an exciting session ahead of us, namely Decoding India's Budget 2022. Without much ado, I will request Mr. Praveen Jain, Vice Chairperson, Institute of Chartered Accountants of India, Washington, D.C. chapter, to kindly come and say a few words. Praveen ji.
Yeah, thank you, Bhavya. Hello, everyone. Good morning to folks in the US and good evening to everyone in India. I'm delighted to welcome you to the Decoding India's Budget 2022 webinar organized by jointly ICAI DC and ICAI New York chapter today. I express my sincere appreciation to all of you for joining us. Before we proceed, I would like to convey my special thanks to ICAI and CA Gokul Das Pe, CA Gagan Gujaral, founding chairpersons of DC and New York chapters, and CA Vish Arunachalam, founding president of CA San Francisco chapter, for their leadership and vision, and also CA Shivendra Sofat and New York chapter members and DC member who made this occasion a reality and this institution successful. Mr. Gokul could not be join us as he is traveling today. I feel privileged today to welcome our guest of honor, Dr. Ravi Kota ji, Minister Economic Wing, Embassy of India, Washington, DC, and Shri Randhir Jaiswal ji, Consulate General of India, New York. Thank you, Dr. Ravi and Randhir ji, for joining us. I also bid a very warm welcome to all the learned speakers for their valuable time and the efforts in joining us today. We are honored to have you all with us. With great pleasure, I would like to inform you that we celebrated the first anniversary of the ICAI DC chapter on February 6, 2022. We all are a part of this chapter due to our shared passion for the vision of the institution. Our passion unites us, and our hard work strengthens the institution. Today's date is also fortunate as we mark the onboarding of a new torchbearer, CA Dr. Devashish Mitra, and new president, and the CA Aniket Telati, the new vice president of the ICAI for the council year 2023. I congratulate both of them. India is currently playing on the front foot in the global economy. Union Budget 2022 is introduced as a blueprint to steer the Indian economy and foster growth. Union Budget 2022 sets positive ringtones for private and foreign investors. Participation measures taken by the government on the fronts of FDI policies reforms, investment facilitations, and ease of doing business have resulted in increased FDI inflow on the country. In terms of the top investor countries, like USA holds a 23% share in the year 2020-21. Amid the pandemic, the government is undertaking a balancing act of containing the fiscal deficit, generating sufficient revenues for meeting its social obligations, and giving a push to economic development and promoting a stable and predictable tax regime. In this webinar, our eminent speakers will be decoding all the interesting stuff for our audience today. Without any further delay, I now request our executive member, Devi Prasad, to give us a brief of our guest of honor. And over to Devi. Thank you very much.
Thank you, Praveenji, and a very warm welcome to all our guests. My name is Devi Prasad, and I'm the Executive Chair of the Washington, D.C. chapter of ICAI. Today, it is my distinct honor and privilege to introduce and welcome our two guests of honor, His Excellency Ambassador Randhir Jaiswal, Consul General of India in New York, and Dr. Ravi Kota, Minister Economic, Embassy of India, Washington, D.C. Our first guest of honor to address us today is Dr. Ravi Kota. Dr. Kota heads the economic wing of the Indian Embassy in Washington, D.C. He deals with matters related to finance, monetary, and investment issues of India and the U.S. and focuses on India-U.S. economic relations and India's investment climate. Apart from handling bilateral economic and finance issues with the U.S. administration, he also deals with issues relating to the World Bank and the IMF. He also looks after the US-India Clean Energy and Climate Partnership 2030. Dr. Kota joined the Indian Administrative Service in 1993. He was a gold medalist in PhD in agronomy and brings with him about 28 years of national and state government leadership experience, focusing on public finance, fiscal practices, and macroeconomic policies. He comes to Washington from his previous posting as Joint Secretary, 15th Finance Commission in the Ministry of Finance, and with deep knowledge of fiscal issues in each of the 28 states in India. He worked with the Indian government extensively from the cutting edge level of state administration to the senior policy level in the federal government in various sectors, from food and agriculture, human resources, urban infrastructure, and internal security. During his tenure as Principal Finance Secretary Assam, he steered the state finances through the transition phase of the Post-Planning Commission, demonetization, and GST. He managed ways and means to raise internal resources through taxation, market borrowings, and externally from multilateral development assistance. Dr. Kota also prepared the state's annual budgets and managed public expenditure. And he was also instrumental in mobilizing private investments and was a key driving force in driving financial inclusion. Dr. Kota, over to you.
Thank you. Thank you so much. And greetings from Embassy of India, Washington, D.C. Thanks for your kind introduction. It is indeed my privilege to be with you today. I thank DC and New York chapters of ICAI for this opportunity. Personally, I have a great admiration for our CA community, especially the kind of capabilities you built up over a period of time. India feels proud of our CA fraternity throughout the world. You deal just not only with figures, but also people, enterprises, and businesses. So the word figure has many meanings as per dictionary, but you are all great figures dealing with figures. That is numbers, most importantly, tracking numbers related to money and its flow for the businesses and individuals. While economists mostly live in economics, you practice and live in society that creates wealth and economy. This cutting edge level knowledge of yours is unique, that always helped improving public finance policies constantly in our country. I always closely follow what you say on the budget, both before and after. I look forward to your deliberations today on some important topics, but before quickly, I would like to make a couple of remarks on India-US relations. Also, some of my personal views based on our interaction with stakeholders in USA from the mission. And I would also like to touch upon a few announcements of the budget that are found resonance among the business community in US, or yet to find traction due to transmission lag or loss. Perhaps in this, both the chapters and representatives present here today, perhaps will be able to help us to reach out to the larger community, and also to the private and private investors in the market. As you know, the US is a major trading partner for India. You must have also had the news last night that our bilateral goods trade touched $113 billion, crossing the historical mark of $100 billion. It signals our deepening and ever improving economic relations. We have strong bipartisan relationship, and we engage based on certain bilateral frameworks on economic and trade matters. On economic fronts, we have EFP, that is US-India Economic and Financial Partnership. 4 months ago, in October 2020, we had the last ministerial here in Washington, D.C., attended in person by our Finance Minister Nirmala Sitharaman and Treasury Secretary Allen as co-chairs. The EFP covers subjects like macroeconomic issues, financial, regulatory, and technical collaborations, climate finance, multilateral issues, and anti-money laundering, counter finance terrorism, the kind of issues there. In addition, there are trade-related frameworks and engagements. Now I will come to Union budget quickly, 22-23. Some may lose themselves in the never-ending debate of fiscal deficit, etc. As Mr. Praveen Jain mentioned that, and also majority have appreciated recent budget announcements are very, very constructive kind of proposals are there, rather than getting carried away by populistic kind of schemes. So it has been appreciated both within and outside India. Two subjects covered in the budget that found a great resonance here in US market are digital financial services related announcements and sovereign green bonds. On digital financial services, there may be many issues announced in the budget at different parts. So I would like to mention three things quickly. One is cryptocurrency, second one is digital rupee, third one is the digital banking units. Cryptocurrency, in fact, the whole world was perceiving earlier that India is going to ban cryptocurrency. So the moment there was an announcement that a tax will be imposed on the cryptocurrency, so it is seen as a signal to regulate cryptocurrency rather than banning. So there is a lot of enthusiasm and anxiety in the market. Second thing is the digital rupee. Indian kind of a economy with such a population, digital rupee itself is seen as an opportunity in a different ways. And of course, fintech companies are looking at as a huge opportunity. Very few countries have started, even a country like China, on pilot basis, they started the digital currency there. So here, digital dollar, Fed is also exploring various possibilities how to roll out digital dollar. But currently, I think they are more preoccupied with other serious issues. The third one, digital banking units, 75 units will be started as per the budget announcement in 75 districts. And foreign banks, especially from US, who are operating in India, they are eyeing on this over a period of time. It will help them to expand their operations, because as on today, they have very limited kind of operations. About 7% of the total banking assets in India are dealt by foreign banks, and they have a huge scope. So Bank of America, Citibank, and JP Morgan, many banks are already operating. Some of them have started. Bank of America has started, of course, it's a supporting kind of a systems in the gift city. More than 5,000 people are already working there. The huge center they have started. Then second one is the sovereign green bonds for mobilizing resources for the green infrastructure. The market is looking at this through three different kind of relevant announcements. One is the PM's COP26 announcements, the larger net zero related kind of announcements. Second thing is in the budget itself, the capital spend is proposed to be raised by 35%. So the more money is required for the investments. And the third one is the borrowings. Proposed government borrowings in the budget are very huge. It's about $200 billion. Though within this overall borrowings, the sovereign green bonds have to play a role. So how effectively we'll be able to attract the investments? The challenge is to create most attractive kind of instruments there. And even in the world also now, by last 2020, as per the confirmed reports, about $111 billion capital has been mobilized through the sovereign green bonds across 25 countries. So this is an area where it's going to pick up very fast. So then the last part, what I would like to quickly mention about, I think all the members here also would like to see and how best we can together create awareness about some of the announcements which are highly relevant to the US market, and India-US business can grow on this. There are a lot of opportunities. One is the gift city. Within gift city, there are four announcements. They are very important announcements. One is the tax exemption on ODIs, offshore derivative instruments. Second one is gift city will act as a facilitation center for global capital on climate finance and sustainability. Third one is world-class institutions and universities will be allowed to be set up in the gift city, and international arbitration center will be located in the gift city. These are the four. I think with this gift city will get into a different level of operations. The second one is venture capital and private equity investments. Especially you are all whoever dealing with US market, you know that what is the maturity level of this market vis-a-vis where we stand. So, and despite of that, last year there is a 5.5 lakh crore investments routed through this venture capital and private equity investment. Now our finance minister announced in the budget that an expert committee will be set up to review the whole systems here in India. I think this is a good time. So all changes, what would happen systematically, and this market will grow very much in next few years. Third one is the blended finance is very important, where private sector would be very much happy to look at it, because government decided to share 20% for the infrastructure projects in the where private investment is coming. So we have to read that one with another announcement which says that public investment to complement the private capital to enhance the financial viability of infrastructure projects. Lastly, as CS, most of you would have dealt with this. This is a very important announcement that is with regard to voluntary winding up of companies. So when last 1 year during my mission post here, when we interact with the various business groups here, generally they say that getting into India is difficult, but getting out of India is much more difficult. So there is a general perception and there is no visibility that how to wind up a company, though there is a from the day the board of directors decide to wind up a company, then evaluation, then getting into arbitration. By the time registrar issues a gazette notification that the company is closed, so how much time it will take, and what is the due process, so that visibility is not there. Though I'm saying it's a perception, because all the reports, even by IMF and other important agencies, say that even in US also, for winding up a company, it takes 6 months to 24 months. So it's a process where when the company is involved with more stakes in terms of finances and other things, it will take time. But the proposal in the union budget is very welcome. This is to establish the center called CPACE, Center for Processing Accelerated Corporate Exit. I think it will help resolving cross-border insolvency also to a great extent. So I would not get into many other announcements, because definitely all experts who are there here would highlight as per the topics today listed for discussions. I would like to close my remarks by requesting the chapters of ICAI in US. We can jointly, along with the missions and consulates we have in USA, we can reach out to various market stakeholders to create awareness about recent reforms, so we can attract more investments and deepen our bilateral economic relations. I would also like to share with you that our finance minister told in a business roundtable in New York in last October, when some Indian origin investors asked her, what are the 3 things that we can do for helping Indian economy and investments from US? So for that question, she answered, 3 things that I would request you to do for India are speak, speak, and speak. So she basically was saying that speak about the positive developments in the Indian economy, and people should know more about India in US system. So that's the main request. So I hope we together will be able to do a bit of speaking, and thank you for this initiative, and thanks for inviting me. Thank you so much.
Thank you very much, Dr. Kota, for your message and announcements, which is well received. And we hope to continue with our good engagement going forward. It's now my honor to invite His Excellency Ambassador Randhir Kumar Jaiswal, Consul General of India in New York, to address us. Ambassador Jaiswal is a career diplomat. He joined the Indian Foreign Service in 1998. And over his 2 decades of diplomatic career, he has served in Portugal, Cuba, South Africa, and at the Permanent Mission of India in New York. In between his overseas assignments, he has served in New Delhi at the Ministry of External Affairs, first as Deputy Secretary, looking after India's relations with the United States of America, and then as Joint Secretary, managing India's relations with Western European countries. In the middle of 2017, he was deputed to serve the President of India as Joint Secretary, managing his international relations portfolio. He is currently serving as Consul General of India in New York from 19th July 2020. Ambassador Jaiswal is passionate about sports, environment, culture, monuments, old cities, and cuisines. He is deeply interested in strategic sustainable development and public policies matters. He has been part of India's delegation at various climate change conferences and was the lead negotiator for the G77 countries at the Rio Plus 20 conference held in Brazil in 2012. Ambassador Jaiswal, over to you. Thank you.
Thank you very much for your gracious introduction. First of all, a big thank you to ICAI Washington and New York chapters for organizing this discussion on India's budget. We've had several conversations on the budget, and that has happened for two reasons. One, the focus of the budget, the provisions of the budget. That itself has generated a lot of optimism and positive sentiments. And for that reason, there is a lot of buzz about what the Indian budget holds and what it portends for the future. And the second reason, the close connection that the Indian budget has, or the close connection that India-U.S. economic relations has with the economic sector in India. So for these two reasons, I see that there is a lot of interest in the budget. It is all very helpful, for we want to bring the best of opportunities that are there in the Indian economic landscape to our stakeholders here in the United States. The budget focuses on growth, on infrastructure, on PM Gati Shakti program. All these opens up new opportunities for collaboration between India and the United States. The budget is for a year, but at the same time, it is a budget which shows us or lays the path for the future. How India is going to clean its economy, how India is going to move on the green energy pathway, how India is going to embrace new next generation technology, 5G, what it is going to do in the space economy. There are a lot of new things, startup, innovation, etc. And all these things open up new opportunities for our stakeholders for here in the United States. At the same time, while it is focused on one hand on budget, on growth and creating new infrastructure, at the same time, there is a heavy focus on inclusive development. How do you distribute this growth? There are provisions for water access, rural health, women empowerment, and many such issues that are closely connected to sustainable development goals. And for that reason, I can tell you here from New York, there is a buzz among the SDG community and the development community in Mid-Manhattan. All these provisions that we have for inclusive development has a huge bearing on the rural economy and the kind of demand, kind of welfare services, kind of impact it is going to have on socioeconomic progress. At the consulate, we are at the forefront of promoting Indian exports. My colleague, Dr. Kota, alluded to how well we have done on the export front to the United States and across the world. We are also in the forefront of promoting technology tie-ups, tourism between India and the United States, investments between India and the United States, and a lot more. We remain committed at the consulate to doing our best to propel India-U.S. economic partnership. And a final word on the GIFT City. GIFT Financial Center that we have in Gujarat has attracted a lot of attention from here, from the investment community here, from the financial community here. And I see that that enthusiasm is only going to grow as people get on-ground experience of the value that it adds to our financial engagement. So with that, I look forward to the conversation, and a very warm welcome to all the experts and participants. Thank you once again, ICAI, for inviting me. Thank you.
Thank you, Consul General Randhir, for your time and for all your support always. We know that all of us can knock the door of the consulate anytime, 24/7. And also talking to us on the support which the consulate and the embassy is giving on propelling the Indo-U.S. partnership, and letting us know on the gift city and the very awaited provisions that have been created for ease of doing business for international businesses and companies and corporates in India. I also thank Dr. Ravi Kota for sharing so much information and the key highlights for the budget of 2022. With this, we'll move to the next chapter of this today's discussion. And I will, request our eminent panelists and speakers for the day to, come and start the discussion. Next, I have Dr. Rakesh Gupta. Dr. Rakesh Gupta is FCA, FCS, AICWA, MBA, LLB, LLM, and a PhD. He's practicing as an advocate and appearing in Income Tax Appellate Tribunal, High Courts, and the Supreme Court of India. He has argued various high-profile cases in the country, drawing wide media coverage. Co-authored 2 books with his partner, Dr. Raj Agarwal, which is published by India's leading publishers, Taxman. Without much ado, I will request Dr. Rakesh Gupta to come and speak to us on the direct taxes. So the topic for his discussion is decoding direct taxes. Rakesh ji, over to you, please.
Yes, thank you, Bhavya, for a very nice introduction. I thank Washington, D.C. and New York chapters of ICAI for having asked me to be with all of you, this morning from your time, and late evening, from India's perspective. So we have heard Honorable Consular General of India and the Minister of Economics. But then my brief is to speak about the proposals relating to the finance bill. So we have seen Honorable Finance Minister said that we are not tweaking either into the basic slabs or exemptions, because that we want that there should be predictable and stable tax regime. Now, but then certain proposals, which have been unveiled in this finance bill, and I have picked 5 or 6 proposals, which may affect even the non-resident Indians, who are there, but then because of their linkages, with the country, economic linkages and economic connections with the country. So the cryptocurrencies, not only the cryptocurrencies gain, but then the entire, new sets of virtual digital assets, which has been defined in very comprehensive manner, now has been brought under the Indian taxation system. And by levying tax at 30% on the gain arising on the transfer of virtual digital asset, a new controversy now has again sprung up as to whether that dealing in cryptocurrencies or virtual digital assets now has got approval from the government, or meaning thereby that its legality has been declared as if by the government. But then the government, represented by Honorable Finance Minister, the Revenue Secretary, then all has said that all options are there on the table. They are in the midst of consultation, the stakeholders, and they will take a conscious call after having the wider consultations. And therefore, merely because a tax has been imposed doesn't mean that the legality has been accorded or impliedly approved by the government. As all of us know, that the Income Tax Act, Indian Income Tax Act, doesn't make any distinction between the legal income or the illegal income insofar as it comes to the collection of taxes. But then apart from levying the taxes, the obligation has been cast on the person who pays, this gain or this payment, to withhold the tax. So now insofar as the residents who are paying, I can understand that it can be monitored and it can be controlled by the Indian tax authorities. But then where the exchanges, which are not situated in India or which are situated in cloud, or in different countries, they happen to pay, how that kind of obligations will be monitored or administered by the Indian tax authority, that poses a challenge. Then there is one very important thing which has come and which may impact even the non-resident Indians, I mean, who will go in for buying the immovable property in India. Now they are supposed to deduct, though they were supposed to deduct earlier also, but that 1% withholding tax now with reference to the stamp duty value of that immovable property which they're going to buy. Earlier, this 1% was with reference to the considerations paid or credited to the account of the transfer. But now this 1% has to be with reference to the stamp duty value. So this, I mean, would impact all. Now, one more provision, I mean, which may impact even the non-resident Indians is about the increased onus or burden to prove that the loan or borrowing which you raise now has been from the explained source. So one more additional burden now is sought to be cast on the shoulders of all SSCs across the board when they happen to raise loans or borrowings to prove not only the source of that loan or borrowing, but then the source in the hands of that lender. So that has got its own practical ramifications because when one is borrowing money from other, then to expect that even the lender, I mean, now would also be called upon by the tax authorities to explain the source of the funds in their hands is something now which has really agitated the minds here. And the suggestions have been given to the government to tweak such regulations so that the impracticalities may be weeded out. Now we have got in India, I mean, concessional tax regime for certain categories of companies. So those companies which were set up on or after 1st October 2019, now if they commence their production or manufacturing facilities by 31st March 2023, and if they are willing to forego certain incentives, then the tax rate now was reduced considerably for them, that is 15%. So now because of the pandemic, the life had come to a standstill, it was stalled. Therefore, this period of commencement of the production of manufacturing facilities by 31st March 2020 now has been increased to 31st March 2024. So that way, I mean, this amendment now has been brought. Now, one very important thing now which has been brought in, which may be applicable to the non-resident Indians, because they have to pay tax qua their, I mean, incomes which accrue, arise, and is received in India. Is a facility to file an updated return. I mean, we know that qua your income, now one is required to file return in India. Income which is accruing or arising or deemed to accrue, arise or receive in India, now the return is required to be filed. And this is called the original return, which can be revised within a particular time span, or that return may be filed even belatedly. But then there is a time limit, and that time limit is quite restricted. But now, by enabling a person to file an updated return to include some income which he has omitted to include in the first place, now, or for which he has not filed his return, but then the time limit which has been given is quite, I mean, substantial. That is 24 months from the end of the assessment year. So practically 3 years from the end of the financial year, now one can file an updated return by including certain incomes which he has not offered to tax so far, though it was due to be offered. So, but then the facility of filing updated return comes with a cost, and that cost is called the additional tax. And that additional tax has also been pegged at 2 levels, at 25% by way of additional tax on the additional tax and interest which is declared in this updated return, in case you happen to file your return in 12 months from the end of the assessment year, or in case you want to take, I mean, more than 12 months, but then maximum time that you can file this updated return by 24 months from the end of the assessment year. So if you want to avail that larger time, then the additional cost is 50% of the tax and interest. So though there are certain hyper technical issues, but then I do not want to go into all those things. So this was the predictable and stable tax regime, though in India we all were expecting, I mean, some concessions here and there, but then given the situations, overall situations of strain on the resources, now it was thought expedient at the end of the government that not to tweak, I mean, the slabs or the rates or the basic exemptions limit, so that the predictable and stable tax regime may be consumed by all and sundry. Now, apart from this, quickly I will speak on the Black Money Undisclosed Foreign Income and Assets Impositions or Tax Act 2015. Now, I will deal only that I mean, few of those aspects which may impact the non-residents. As all of us know, this act now is applicable only on the resident Indians, not on non-residents and not ordinarily resident. But then the foreign income earned in a year in which a person was resident, or any asset which has been acquired or made in a year when the person was resident, now that was required to be disclosed in the income tax return of the resident. And in case it has not been so declared, that becomes undisclosed foreign income and undisclosed foreign asset. Now, when the non-resident Indians return to India and they acquire the status of the resident after some time, then all foreign assets, I mean, which they have, even if they have been acquired out of the disclosed sources, or which have been acquired even at a time when they were non-residents, are required to be disclosed in the Indian tax returns. And by not disclosing such kind of returns when one becomes a resident, then there are penal and prosecution consequences that has to be borne in mind. Because I have seen many non-residents, when they become residents in India, they omit, forget, not with any design, but then accidentally, and then it has got, I mean, several and severe consequences. So friends, now I have got the brief to speak about 10 minutes. I have taken the 10 minutes. Now the decoding the entire finance bill may not be possible, and therefore I have adopted the approach of the T20, I mean hitting. So thank you, I mean, for inviting me. Thank you from the core of my heart.
Thank you very much, Rakesh. So kind of you. And T20 is such a popular format these days in the world. Everybody loves it. And you've taken us through all the major points. We really appreciate your time and joining us from India at this hour. Thank you. While I was mentioning about the support which we always get from the embassy at DC and Consul General's office at New York, I would also like to extend a warm welcome and heartfelt thanks to Vipul Dev ji. As you, some of you might know, Consul Vipul Dev ji is the Consul for Press, Information and Culture at the Consulate General of India office at New York. Vipul ji, thank you very much. We are very grateful to you for all your help and support. Please do say hello to all of us and all our guests and speakers if you're here.
Thank you so much, Bhavya ji, for this introduction. And basically, this is what we are here for. And all our panelists, I mean, it's an honor to hear their views about the recent budget that has come in. And I look forward to views from other panelists as well. So I'll just keep it short and leave it to the experts for now. Thank you.
Thank you. Thank you so much. Moving on in this journey, I will, we have our next speaker, Mr. Vishal Garg, who is a chartered accountant and and is practicing indirect taxation matters since 2003 at Ludhiana and Chandigarh. He's the ex-chairman of Northern India Regional Council Institute of Chartered Accountants of India, which is governing and managing affairs of approximately 65,000 qualified CAs and 200,000 CA students all across Northern India. In 68 years of history of ICAI, he's the first person from any branch of Northern region who has reached to this high post of chairman of NIRC. He's also one of the youngest chairman of NIRC. Also in the last 30 years, he was the only person who crossed Kota with first preference votes in 2009, even if his first election as NIRC. Today, he is going to talk to us about the role of indirect tax in the Indian economy. Vishalji, I will request you to kindly come in and speak to us about it. Thank you.
Thank you, Bhavya. Thank you, Washington, DC and New York chapter for inviting me to speak on my topic, role of GST. First of all, I thank my friend Shivinder Sofat for inviting me and interacting with the, I think, USA. I think when we are sitting in Punjab at Ludhiana and thinking about USA and Canada, it is I think always a friendly match between Canada and India. And so now it is going to a good relation start with USA chartered accountants. Respected Randhir Jaiswal ji, Consul General Ravi Kota ji, Mr. Vipul Dev, Minister of Publicity, Mr. Praveen Jain, Chairman, New York Chapter, Gokul Das ji in absentia, and my other friends, Devi Prasad, of course, Bhavya. We have couple of times, we have discussion on number of things. I think it is the start of a relationship between with this program. We have a certain business relations also. We will start from Punjab to USA. And of course, it is a good platform to interact. And of course, it is my pleasure to share dais with Mr. Rakesh Gupta. He is not only having almost all the degrees, but they are also ex-tribunal member, as well as nowadays, he's also a good poet. I was waiting he will speak certain poems on the budget. He wrote number of poems on the budget. How budget is now in poetry words looking like. So friends, it is a 2020 match. I will start my deliberation on the how GST is impacting in Indian economy. Right now, I'm sitting in the car parking of a friend's marriage. So might be my face is looking like certain because 2-3 mobile phones lights are on my face. Right now, I am in the car. So friends, GST is having a big impact on the Indian economy. And very soon you will find it will going to change a big blow on Indian economy in a positive side. I have shared certain data because before that, in 2017, the GST has been implemented in India. Before that, there are around 15 type of laws are there. But this GST has replaced all these laws with a single GST regime. What is the best impact of this GST? It is, in my perspective, is now every person knows what tax he is paying to the government and what price he is paying for the product. Earlier before 2017, I am buying a electronic, say LED TV, LED, I am buying it for 50,000 rupees. Yes, say $100,000 in India. I couldn't say how much taxes I have paid to the government exchequer. Because earlier there is a sale tax, excise duty, custom duty, import duty, number of different taxes are there. So there is a huge chance of manipulation by the sellers, manufacturers, importers, traders. So ultimately the end consumer was not aware how much taxes he is paying to the government and how much prices he was paying for the product. But due to this GST, what positive impact I have seen? I am today buying a LED of 50,000 rupees, and if the GST rate is 18%, so I can say that around 8,800 rupees I am paying to government, and remaining 41,200 I am paying for LED price. So this is the biggest right. I am sharing certain data before all of you. These data, I think it is today's budget only, but the government have presented on 1st of February. Beside this, I have shared all the data, how the GST have been progressive. How these data starting from 2006-07 to 14-15 and then to 2022-23. I think there is a constant increase throughout every year. Every year there is a constant increase. Every year you will find that if the total IDT collection, indirect tax collection was 2,48,000 crore in 2006-07, but now it is in DT collection was 2,19,000. Today again, both are 50-50 player. In total tax revenue, you will see that both are at 50-50 regime, 50-50%. Today, the total IDT collection has been risen to 13,57,000 crores, whereas DT collection has been risen to 14 lakh crores. So you can say that, but this is not only the end. From now you will see that GST revenue will starting cross to each and every revenue of the country, because it is 5th year when the GST has been started implemented in the country, and in this 5-year period, this GST has shown number of hiccups during this, because India is now so big country, around 1,21,25,000 assessees are there in this GST. If you will see the data which GST is compiling day by day, on daily basis, almost 1 crore of e-way bill are making by the assessee in India. 1 crore of e-way bill, 10 million e-way bill, 10 million transactions are everywhere. Goods are from one place to another place. This is talking about only those who are filing this e-way bills. E-way bill is a transaction which is required for movement of goods from one place to another. But beside this, there are around 3 crores of people who are not registered in this GST regime. So this GST presently revenue is 1,30,000 crores per month. This is the highest ever since it has been started. But the GST, what impact it has shown? Now everyone who is doing some things, certain clandestine removals in this GST, everyone's record is maintained in the government system. GSTindia.gov.in website is creating now you can say that everyone who is doing theft in this GST, who is doing any theft of the taxation system in GST, his meter, I will say, his record is maintained in the GST. The government has huge data with them. Now they can verify and check each and every person's data as and when they require. But I want to say that before GST period, if anyone is doing any theft of taxation, it is very difficult for the government to check and verify what is the exact theft it was. But nowadays, after implementation of GST, the economy will grow so fast after this, because now if a person is doing theft of taxation, he and government both knows he is doing this. So in coming time, after this changes brought by the government in this budget and in the last GST Council meeting, now everything depends upon GST Council meeting, and the last GST Council meeting and this present GST system has made certain amendments in GST laws, due to which it will be very difficult for everyone to do the theft in GST. So I am seeing this budget and this GST having a positive impact on Indian economy. So whatever companies who is want to invest in India, they will have a positive impact because they want a transparent system. And in my opinion, this GST system is giving a transparent GST taxation system in India. So looking for a positive impact on Indian economy, I will end my deliberation, because as Bhavya says, it's a 2020 match. Otherwise, my topic is so big, I can speak for 1 hour even for this topic even. So thank you, friends. Thank you for giving me this opportunity to interact with all of you. Thank you.
Thank you, Vishalji, for sharing this, the landmark positive impact of GST and the way forward, which is, and the, benefits that it will create for the Indian economy. And also congratulate your friends for getting married, and you're taking out time on such a, occasion. I also wanted to, thank all the attendees, who have joined us on this Saturday morning, evening, from various geographies. And I would request, all of you, if you have any questions, which we will be taking, towards the end of the session, please do feel free to put your questions in the chat. And if they are, if you will like any particular speaker to answer it, kindly mention the name. So towards the end of the session, we'll have our, the Q&A session for the event. Moving ahead, I have our next eminent speaker, Mr. Abhishek Rastogi. Mr. Abhishek Rastogi is a chartered accountant and a lawyer, and he has done his BCom honors from the prestigious Sri Ram College of Commerce, Delhi University. He's partner in the Indirect Tax Practice Group in the Mumbai office of Khaitan and Company. Prior to joining Khaitan and Company, Abhishek was a director at PwC Mumbai, specializing in indirect taxes. Abhishek has argued several landmark cases before various tribunals, high courts, and Supreme Court of India. He has authored dozens of commentaries on indirect taxes. Abhishek has been acknowledged for his experience and expertise by, and I'm just going to, read out this list, and I'm sure I'm not able to do justice to the introduction here. Economic Times for 40 Under 40 Award, Asian Legal Business and India's Super 50 Lawyer in 2022 and 2021 consecutively, World Tax as highly regarded in indirect tax and highly regarded in tax controversy for 21 and 2022. Asia Law as notable practitioner in tax category, International Tax Review Award in tax category, Legal Era for 40 Under 40 Leadership Award. As we all know that this year India is celebrating 75 years Azadi Ka Mahotsav. On this glorious occasion, Abhishek will be speaking to us on India at 75 to India at 100 years vision of the Indian government. So without any delay, I would request Abhishek to kindly come and, speak with us.
Thanks, Bhavya, for that introduction. And in fact, I would want to thank all my fellow panelists and all the attendees. And this is, in fact, a great honor for me to articulate few thoughts which are very relevant in the context of India, and in particular, India and the US relationship. This budget 2022 is the foundation to steer economy. And as has been mentioned in the budget, over Amrit Kal of next 25 years. India at 75 and India at 100. We aim to achieve what we decide today. My government, Modi ji, and his entire team today is contributing in the most pragmatic way to address not only the issues of industry, but also to improve India's reputation across the globe. We have seen in India that how this government is doing everything in the best possible way to improve our visibility, to improve the ways of doing business, and to improve the ease of doing business in India. This budget lays down the foundation on various aspects, technology being one, infrastructure being the other, and so on and so forth. With all of these tax reforms which are on the cards today, India is moving at a very, very decent pace now to match on any parameters on the global charts. Be it technology, India is matching, and I have some numbers to prove that. Be it infrastructure, and be it all other various several parameters when it comes to tax and so on and so forth. Today, the finance minister is very, very particular to move towards fiscal consolidation. We are very cautious about the fiscal deficit, and we want to improve our tax buoyancy. If you see today, the tax buoyancy is at 1.4, which is perhaps very high and which we would have never dreamt of. And I think it is also the taxpayers who must be congratulated for this, because if we see the amount of tax paid today, the taxpayers are very confident that the amount of tax which is paid is going into right hands, is being used for infrastructure, is being used for all of these initiatives. And hence, even if you see the advanced tax payment collections, these are at record high. Both on the direct tax and the indirect tax sides, the collections are so high. The tax buoyancy has improved, and that's how it has helped our finance minister to improve the tax buoyancy and move towards fiscal consolidation. Coming on to the India and the US relationship, I think we share a very special relationship with the US. And I have few numbers, and I would thank my team to give some of these numbers. India has always had a trade surplus with the US. And if we talk about 2001 and 2, the trade surplus was 5.2 billion USD, which increased to 17.3 billion in 1920, which was the pre-pandemic. As far as the exported goods are concerned, in the pre-pandemic period, goods worth USD 53 billion were exported from India to the US. That's roughly 17% of all India exports that year. And imported goods worth USD 35 billion. That's roughly 7.5% of all Indian imports. And as far as the services are concerned, India accounts for nearly 5% of the US imports. So what I want to highlight through these numbers is that India and the US have always been great trade partners. We have always played to the assets to the other and have always exchanged both goods and services in the best possible way. India is much aware, our government is much aware of these trade relationships which we have with India. And we know for a fact that when we talk about the investment, US is the 5th biggest source for FDI in India. 1/3 of all foreign portfolio investments into India is from the US. And we can't ignore the relationships which we have in India for various of such factors as well. And that's why to improve these trade relationships over a period of time, we have the India-US Trade Policy Forum, bilateral India-US CEOs Forum, private sector advisory groups, and so on and so forth. Now, what this budget has done, this budget, if we talk about these trade which is happening between the India and the US, of course, we want to make the best use of technology. Today, the globe across is looking us for the technology advancement and the development of technology which is happening on various counts, be it Aadhaar, be it automation, be it tax payments, and so on and so forth. And I will have a few more examples later. Now, on the customs side, the endeavor of the finance minister is very clear. Procedural ease with automation, e-processing through common portal, and that will all become a reality. We have made significant announcements with respect to Make in India. We would not want Tesla to manufacture in China and export from China to India. We want Tesla to come to India, manufacture in India, and our government has been very vocal, very clear about these policy initiatives. We want Make in India, we want phased manufacturing programs, and at the same time, we would give all deserving incentives to different sectors. And that's why when the US raised an issue before WTO with respect to the SEZ policies and several other remission policies, India was the first one to pragmatically move and proactively address all of those issues. Now, for a fact, we know that India is arguing at the WTO forum at the appellate level with respect to these remission duties. But pragmatically, this budget, my finance minister has very pragmatically announced that she would revamp the entire SEZ policy. There'll be new framework. When we are today competing at the global level, it is our duty and responsibility as well. And the government realizes that to come up to the global standards, we know for a fact, and this is today the reality, that if we see the global growth rate and if we see the growth rate which India is achieving, we are far much better as compared to the global average. Today, for the first time, and this is an important fact which most of you would have not known, that today, if we see the global birth rate, the average global birth rate, and we see the India birth rate, we have for the first time come down below that global rate. And when we talk about the growth rate, we are doing much better than the average global growth rate. And as compared to the birth rate is far less for the first time. Which means what? That the GDP per person, the ratio has changed, and rightfully so. And that's why India is not what we are today, what we were 10 years back. Today, the per capita income and all of those parameters have crossed a particular level. And that's why the US has raised issues that now that we have moved to different category, what should be the way out, what must happen to trade policies, what must happen to remission schemes, and so on and so forth. And this budget has made pragmatic announcements of what will happen at the global level. And I think we must all be proud of such announcements, because the government always addresses special issues which are being raised by our friendly nations such as the US and other countries. Now, if we talk about GST, and my fellow panelists talk about GST, I think there are very, very important aspects with respect to GST. The most innovative concept in the world, which is not even applicable in the EU, is with respect to the IGST model. The most innovative model to address issues between the interstate transactions is the IGST model. The most innovative formation of technology, the GST network, which basically tracks each and every transaction of supply. And the person availing the goods and the services or buying these supplies would get the credit based on automation systems. This was not possible. Billions and billions of transactions through the GST network are today getting tracked. Today, we are a proud nation to say that artificial intelligence is being used to track tax leakages. Today, we are intelligent enough to use all technology developments to track tax evasions. Our bureaucrats are being trained to use artificial intelligence. And who would have thought that credit matching will also become a part of this entire chain? So there will be no tax leakages in the days ahead. And when we today move from India at 75 to India at 100, for sure, we will be a clean economy, a paperless economy, dependent on technology, and we would want to achieve that through appropriate measures today when India is at 75. When it comes to electric vehicles, there are positive announcements in the budget. We want to address environmental issues at the global level. When it comes to technology, we are not shying away from the most modern form of 5G and so on and so forth. When it comes to Make in India, today the government has given huge incentives for production-linked incentive schemes, because we want the manufacturing facility in India to have all modern facilities, infrastructure, and keeping in mind about the environment. And my fellow panelists also spoke about the virtual digital assets. India, of course, want to move ahead with technology, but we want to be very sure that we regulate all of these issues in the best possible way, because we do not want any bloodbath for our common people. The government has taken full responsibility to come up with a lot of these new measures, new regulations, so that all of these are tracked. There are regulations to ensure that there is no money laundering. We want to ensure today that these virtual assets, of course, we cannot ignore the blockchain technology. We would, of course, be the first one to move ahead with the blockchain technology. But at the same time, the government wants to be very cautious that the investors, especially the middle class investors or the retail investors, are not cheated. There are no frauds which are happening due to this new technology, and hence we want to encourage, but we want to regulate. And there are other things such as surcharges on long-term capital gain, which is very important for NRIs. There is a straight capping. We want our NRIs staying in the US to invest in India. And that's why there is a capping of 15%, which has happened in this budget. So from e-passports to long-term capital gains to virtual assets and so on and so forth, I think the government is very pragmatic. Today, we as a nation want to do everything so that we move in the most pragmatic way to achieve the desired results and goals. So I think with this budget lays the foundation of that Amrit Kal for next 25 years. And a special focus is always there and will always remain between India and the US relationship. So I think with that, I would want to thank again once more to Bhavya and all my friends at the ICAI in New York and Washington, DC. It was an honor for me to address this evening.
Thank you, Abhishek. It was a lovely, lovely hearing this, and you highlighted the strategic relation of India and US in these special times, and the tremendous impetus of the Indian government for taking new measures and ever changing and moving and evolving with the world, so that India is ahead on all positive challenges and fronts. And we really appreciate.
I must just mention that in all my conversations with the finance minister and the commerce minister, we have always thought of, planning the out of the box thinking, be it tax, be it economy, be it general public. We have always come out with a thought provoking ideas that, how we as a nation should move ahead. And that is very encouraging to share.
And I think we can all see in all these, whether it's the budget or any other regulation which comes through, we are seeing all, the entire effort and the vision which the Indian government is having for these things.
Absolutely right. Absolutely.
Thanks
again.
Thank you, Abhishek, for taking our time at late hour India time evening. So, moving forward on this journey, like we said, it's a journey. Abhishek just spoke on the 75 to 100 vision of Indian government. We have, our next speaker, Atman Trivedi, and Atman is going to speak to us about the India-U.S. relations and the road ahead. For a brief, I would like to, introduce Atman today to our attendees and panelists. Atman is a senior vice president at Albright Stonebridge Group, part of Denton's Global Advisors, and he co-leads the firm's South Asia practice. Atman brings deep experience across diplomacy, business, law, and politics, with particular expertise in India and significant knowledge and relationships across Asia. He was managing director at Hills & Company from 2017 to 2021, where he advised leading information technology, telecommunications, consumer goods, and financial clients on geopolitics, trade, investment, and sustainability with a focus on India and China. Previously, he was Senior Director for Policy in Global Markets at the U.S. Commerce Department, where he was a day-to-day policy lead on the U.S.-India Strategic and Commercial Dialogue and the U.S.-India CEO Forum. He has served earlier as the Chief of Staff in the U.S. State Department's International Security and Non-Proliferation Bureau. Atman has worked extensively in Asia and was part of the diplomatic team that eliminated Syria's declared chemical weapons and helped address North Korean and Iranian threats. Atman, I would request you to please come and speak with us about the India-U.S. relations.
Thank you, Bhavya, for that kind invitation, kind introduction and invitation to ICAI, along with Shivinder. Happy Saturday morning, everyone. I really appreciate the opportunity to be with you today. As Bhavya said, the topic of my remarks is one that's very near and dear to me, and I suspect many, if not all of you, India-U.S. relations and the road ahead. So I'm going to zoom out a little bit and move away from numbers and duties and taxes and talk a little bit about bigger picture ideas with you. My day job, as Bhavya noted, is a senior VP and co-leader of the South Asia team at the Albright Stonebridge Group, part of Denton's Global Advisors. I have the great good fortune of being able to call upon a terrific set of colleagues in New Delhi who monitor closely and advise on a wide range of technology and other policies, regulatory and legal changes impacting businesses, nonprofits, and foundations, as well as NGOs. I think the speakers before me captured the richness, the dynamism of the Indian market, the exciting changes that are taking place that were reflected in India's budget last week. And our team in Delhi works with me to stay on top of all of that. The US-India relationship has changed dramatically in just over 2 decades. One of my first and formative experiences here in Washington came in the summer of 1998. I'd finished my undergrad and grad studies and had just begun a summer internship at the State Department in the India desk office. At the time, there was one Foreign Service officer at State devoted to India, one FSO, and with me, one intern. The US-India relationship was beginning to grow after the end of the Cold War, but it was still relatively sleepy and could have used a bit more ambition, we could all agree. Ambassador Frank Wisner in the 90s was there for meetings between our 2 countries' leaders. And they would gather and talk about issues that were significant, like almond trade. But I think we can agree that there's more to talk about in the US-India relationship now than just almonds. That summer, though, South Asia would climb near the top of policymakers' agendas in Washington. India tested a series of nuclear weapons in May and June. Pakistan followed suit. The US, some of you will remember, was furious about the impact of the tests on the global nuclear non-proliferation regime. And they would go on to impose sanctions on both countries, of course. Now, the US ambassador to India at the time was former Ohio Governor Dick Celeste. Ambassador Celeste would rush to DC to try to calm things down that summer. As the most junior person in a very small office, I was asked to organize his meeting schedule. And he kindly invited me to tag along for his consultations. And I vividly recall as a mid-20-something being in the room and listening to him plead to cabinet officials of US economic agencies not to throw the book at India in terms of sanctions and other punishments. You know, a lot has changed, needless to say, since those sometimes tedious and even occasionally stormy times. Thanks principally to Indian Americans and Indians of good faith on both sides. People like you who've been patiently working the relationship one email or one client at a time. The Cold War era estrangement has subsided now between us, and India's markets have steadily begun to expand after the seminal economic reforms in 1991. And as China's rise started to create unpredictability and uncertainty, the 2 democracies wisely discovered ways to find common grounds on India's nuclear program. 30 years ago, in 1992, annual trade was a scant $2 billion. Defense investments in India were almost zero, and the 2 militaries had little in common. Today, the United States is deeply invested, deeply in India's development, growth, and security. We are strategic partners in the truest sense of the word. And one of the few things that Republicans and Democrats can agree upon today is the importance of the US-India friendship. That there's no doubt about in Washington. In the first year of this new administration, India began to take center stage in US foreign policy and as part of a new coalition of democracies in Asia. That grouping, known as the Quad, is working to vaccinate the region and the world against COVID, spread the benefits of renewable energy, and ensure the swift and safe dissemination of critical and emerging technologies, among other public goods that the world needs right now. Now, you'll remember that the Quad met at the leader level at the White House for the first time ever last September. The president has spoken with the prime minister more times than I can keep count of. The defense secretary, secretary of state, and special envoy have all traveled to India for extensive official consultations, and is also engaged with India's vital civil society leaders. At the end of the year, USTR Catherine Tai had a very productive visit with her counterpart. But despite all of these signs of progress, there's an opportunity to do more in this relationship on public health, on education, climate change, and sustainable energy. We talked about sovereign green bonds in the budget, the use of technology and job creating innovation, where the budget is highlighted areas like electric vehicles for investment, and of course, democratic institution building, to name just a few areas. In all of them, it's Indian Americans, and of course, our families and friends back home, the people of India, who can and will be positive agents of change for both democracies. Now, on the commercial, trade, tax, and economic issues that many of us here this morning focus on, US-India ties have moved forward, but I would submit maybe not quite at the pace and momentum of a security and defense partnership. I agree with the views that we've heard about the pro-growth, far-sighted budget, one that invests in infrastructure, capital expenditures, and green development. That has appropriately generated optimism and positivity and a renewed enthusiasm for India's long-term economic prospects. I think we can all agree that the benefits of even more robust collaboration across non-strategic issues, issues of commerce, trade, economics, that would be enormous. Now, like the US, India comes into 2022 with a fair number of challenges. Again, the recently announced union budget projected optimism. Particularly, I thought the major investments in infrastructure and capital expenditure. But this growth stems from an unfortunately lower base from the last several years because of economic slump that predated COVID-19 and then was unfortunately accelerated and deepened by the pandemic. Job creation remains a key challenge. But things are looking brighter now on the economic front, particularly as India is showing resiliency in response to the recent Omicron wave. Internationally, India finds its overall security to be challenging. If you look to India's eastern border, China has tried to use the pandemic to establish facts on the ground at the border against India. We can't let that kind of aggression stand. China-India border differences persist and seem unlikely to be resolved soon, unfortunately. And to India's west, the Taliban's takeover of Afghanistan unfortunately increases the security risks to India. The likelihood in particular of extremists with ties to Pakistan launching attacks against India. Now, India is trying to craft its trade and economic policies against this rather complicated economic and international security backdrop. On the one hand, two-way goods trade grew by 42% over the past year. Inbound foreign direct investment has risen by 6.7% over the same time. On the other, India and the United States are increasingly taking steps that draw into question trade liberalization and keeping markets open to the flow of goods. Nevertheless, at the end of 2021, there were encouraging signs that top trade officials in both our countries may be able to find some common ground. For India, there is a real opportunity, of course. Global businesses are taking a fresh look at democratic India as a supply alternative to China. But the rest of Asia is not waiting around for either the United States or India to determine its trade policies. Japan, Australia, and the 13 other participating countries in the Asia Pacific have all joined the RCEP trade agreement that went into effect last month. China is knocking on the door of CPTPP along with others. While Beijing has a tremendous amount of persuading to do to get into that trade agreement, major powers tend to have a way of bending international institutions to their own will. China's overreaching has led to new US-India collaboration on commercial issues that overlap with security. I had mentioned the Quad, where a lot of this overlap can be found. Progress in these areas is important for India and for the United States, but it's not a substitute for greater trade cooperation. The US and India appear to be moving further apart, not closer together, on regulating cross-border data flows. The much-awaited Joint Parliamentary Committee report on India's Personal Data Protection Bill last month highlighted the need for Indian data sovereignty. Here, India's policy direction reflects a broader context in which reforms have slowed significantly over the last decade. As Arvind Subramanian, a former chief economic advisor, pointed out in the most recent issue of Foreign Affairs. You know, despite these few hiccups, India has taken a number of positive steps that need to be acknowledged. One of them was that it recently settled lingering tax cases where Vodafone and Cairn Energy were alleging that the government was imposing taxes retroactively. That issue has now been taken off the table and resolved. Another very interesting and I think important development is in the trade policy space. New Delhi is making a visible positive push to negotiate new agreements with the United Kingdom, with the EU, the UAE, and Australia. And there's even been talk about broaching a free trade agreement with the United States. Now, you'll hear some skeptics in the US ask whether these deals will actually be finalized and implemented, or whether these talks will reflect a high set of trade ambitions. But I say that at a time when highly industrialized economies in the West, including here in the US, are struggling to keep markets open, even limited trade agreements strike me as positive steps that should be acknowledged and applauded. The hope is that India comes to the conclusion that more policy reforms, including trade policy changes, offer the best prospect of reversing the shrinking size of India's manufacturing sector. You could make a similar comment, I think, for many Western countries, including the one in which many of us Indian Americans reside in today. But at the moment, the Indian government will offer 5-6% subsidies to business as part of the PLI program, but it could be undercutting its own positive efforts by simultaneously raising duties on similar products to offset the costs. So I'm going to wrap up with some quick recommendations that take on more of a commercial focus for the U.S.-India relationship. First, focus on robust implementation of the highly ambitious Quad Leaders Summit agenda. The Quad foreign ministers, Australia, Japan, India, and the United States, just met this week. Their bosses, the leaders of the four countries, are to get together in the next couple of months. Second, work to reduce commercial barriers in jointly identified areas such as health, where cooperation may be feasible, and in areas where finding common ground is an urgent priority for both countries, like digital services. To be balanced, the latter conversation needs to take into account India's legitimate interest in greater mobility for high-skilled workers, experts, and of course, students. Third, let's prioritize early progress on the issues that trade negotiators from the last two administrations have been discussing in recent years, like on medical devices and certain agriculture products. Without restoration of India's GSP being on the table, significant progress on market access issues could be tough. Fourth, we should try for progress on regulatory coherence in finding common ground between us on environment and labor. Unpredictable changes to India's regulations, as like they do everywhere, represent a cost of doing business. Moving on environment and labor will obviously present challenges for India given its national circumstances. But it's not only a political necessity for the US, but I think it is something that's important for both sets of people. Fifth, when aiming at China on trade and investment issues, let's be mindful of not hitting allies. US and Indian companies with operations in China, of course, also import inputs into India or similarly onshore investment to India from China. Here's the big picture, I think. China's rise in a historic pandemic make it more important than ever for India and the United States to narrow their differences on economics and trade issues and to continue to accelerate their impressive and remarkable partnership on security and defense issues. Both India and the US, their competitors and their adversaries are moving forward with their own plans for deeper economic integration. So neither country can afford to lose sight of that fact. We need to find a way to raise our collective ambition on commercial issues and strive to achieve still more together. The two countries have come a really long way since the summer of 1998 and those challenging times when the United States and India were simply not seeing eye to eye. I can't wait to see how much progress we can make towards realizing the current president's dream of making the two countries the world's closest for Washington. The coming year will be an especially big one for both, as India gets ready to celebrate its 75th birth anniversary. I think there's simply no limits to what India and the US can do together to advance the fortunes of both our peoples. Thank you to ICAI, and I'm looking forward to the Q&A.
Thank you, Atman. This was very enlightening. And again, thank you for reiterating the importance of the relationship of India and US in the current world, and of course, the importance for India and US for each other, which is also very, very critical. So now moving on this T20 format of journey, I'm going to request our next speaker, Ms. Abha Kumar, to come and share her views on the impact of fintech and the role of finance professionals in today's times. to introduce Abha. Abha is a business transformation leader with extensive global operational experience leading digital and organizational transformations. She's a thought leader and has spoken globally on topics such as diversity, innovation, and the future of work. She serves on the board of Vahana Tech Edge Acquisition Corp. It's a blank check company, Notify.io, an enterprise SaaS company, and the advisory board of Shopilier, which is an e-commerce startup. She serves on the advisory board of Shanti Bhavan, a non-profit organization providing education to children from disadvantaged communities. As CIO at Vanguard, which is, as we all know, manages $8.8 trillion of asset under management, she led the strategy to fuel Vanguard's growth with global talent and innovation. She has also held senior leadership positions at Dow Jones and Company, the New York Times, and Morgan Stanley. In 2018, she received the American Business Association Gold Stevie Award for a visionary for creating ecosystems of tomorrow. She received the Inspirational Women Leaders Award by Roshni Media in 2019. In 2022, she was featured in Diligent Faces of Modern Leadership series. She will be speaking, now, like I said, on the impact of fintech and role of finance professionals. Abha, without any further delay, I will request you to kindly speak to us on the topic. Thank you. Abha, I think you're on mute. If you can kindly unmute yourself.
There's always that danger with Zoom, isn't it? My apologies. Thank you so much, Bhavya, for the introduction. And thanks to ICAI for inviting me to be part of this distinguished panel. I have actually spent my career in implementing global business transformation, and I study the future of work because it's absolutely fascinating. And I do that with both academics and professionals in the area. Because what I found is that cultural change is probably the hardest. When you start about retooling and reskilling. So when I looked at the budget in the context of the Indian budget, what I found is that digital is the center of the budget. We're talking about digital currency, VDAs, digital health, agriculture, digital transformation, creating an infrastructure. And what this said to me is all of this requires all of the parts of the economy, which is actually made up of a lot of organizations, to rapidly change because they are being disrupted. The way work is being done is being disrupted. And these organizations, for the first time, are actually very hyper-connected and independent. In the past, large organizations did not compete with each other. They actually were in competition with each other. But what we find today is more and more organizations are collaborating with each other. I mean, a simple example in the US would be UPS, the Postal Service, and FedEx. These were competitors, fierce competitors, and now they collaborate. And all of this makes life a lot more complex. And it makes life more complex for all the financial experts because they're in the midst of all of these organizations trying to make sense of how do these mergers occur? How does work occur? How do we ensure that it's fair? And what happens in that context is the workforce, which is really will be my focus for the next couple of minutes. And that focus is when we look at the workforce of tomorrow, what we're looking for is we're looking for learners. We're looking for people who can connect the dots. We are looking for people that can think outside the box, and we're looking for agents of change. So one of the biggest things for organizations is, and it makes it harder when it's a country, is how do you bring about all of that change to ensure that all of the things that all of you have talked about can actually happen? So I think at the heart of everything that we're talking about are individuals that make up the workforce that needs to change. Now let's talk about financial professionals, I think, in particular. The work itself is actually changing for all financial professionals. They need to be tech savvy. So whereas I think in the past, they just needed to be sure that the numbers tied. Now, I don't mean to say that's all they cared about, but one of the major portions of what they cared about, that the numbers ticked and tied together, and that the regulations were followed. I think they will be using a lot more of AI, ML for all of that in the future. So a lot of the work that they did will actually be automated as they look to the future. So what does that really mean? It means that they need to be much better at detecting patterns, at looking at patterns for future projections. We have, as financial professionals, always look back to determine what the trends are. I think that's actually changing, because the amount of just-in-time data that they have access to will actually allow for just-in-time changes and adjustments that are happening. And they also require a global mindset, because when we start to talk about partnerships, and we talk about whether that's public partnerships or startups or innovations, all of that starts to change, and the global mindset becomes exceedingly important. So the work itself is changing. The second piece is the ambiguity is actually increasing tremendously. ESG impact has all of a sudden become a lot more important. Regulations actually have not caught up with digital at all. So there are lots of times when the regulations are actually behind where the technology advancement is. So as finance professionals, I think we all need to be aware of this great future that we have, the current that we're dealing with, and the past that we're tied to. And then I think the last thing really for financial professionals is partnerships. The number of partnerships are actually increasing. The types of partnerships are increasing. Cross-border collaboration is becoming more important. Cross-border collaboration immediately means a lot more regulations. I think public and private partnerships are increasing. Startups and public partnerships are increasing. Public and startup So this is just my way of saying that as financial professionals, it becomes very important to start to look at the impact of all the digital components that the budget 2020 brings into bear. And what does that mean? And how will you actually help your clients, whoever they might be, in order to get over this hump while the regulations catch up with where everything is? So I think at the end of, and I will actually conclude with, I will certainly be open to any questions that come during the question session, but I think finance professionals need to be learners. They need to be able to connect the dots. They need to think outside the box. And I think above all, they need to be agents of change. So on that note, I will turn it over to you, Bhavya.
Thank you, Abha, for your the words of wisdom and highlighting and underlining the collaboration and the impact it has on the fintech and finance professionals. Moving on this, like Rakesh ji had said, the T20 journey. I will move on to perhaps the last over of the day, which is our last speaker of the day, Mr. Uday. As they say, last but not the least, as I fondly address him as Uday Bhai. Uday Bhai is a chartered accountant and a bachelor's in commerce from University of Mumbai. He's the lead partner in the global tax practice at KNAV. He's based at Mumbai office, and Uday has kindly, has held key positions in the Big Four firm, including the national head of tax with KPMG India, Global Tax Partners of Anderson India, and co-head of tax at RSM India. His expensive career spans over 30 years, during which he has worked extensively in M&A, inbound and outbound tax structuring, cross-border transactions, and global reorganizations. He has been regularly nominated as a leading tax advisor by Euromoney in the last decade. He has co-authored a book, General Anti-Avoidance Rule, GAAR as it is called, Establishing Substance Over Form, which has been published by Bloomsbury, UK. He has interacted extensively with the Central Board of Direct Taxes and the regulatory bodies in India by making representations to them on international and domestic and regulatory issues. He's also an advisor and board of Tax Sutra, a leading Indian tax portal. And being a tax visionary that Uday bhai is, he is frequently invited by various news channels to participate in debates and express his views on various tax issues from time to time. In addition, I also wanted to, thank Mr. Vaibhav Manik, who has also joined us from Mumbai at this late hour. A very, very quick introduction, and thank you, Vaibhav. You've always been very, very supportive, and Vaibhav is also, one of the founding partners of KNAV and the advisory lead. Thanks, Vaibhav, for, getting this all together today. So Uday bhai, we'll request you to kindly come and speak to us on a topic which is very, very close to my heart, which is investment opportunities for Indo-American businesses and NRIs in India, the tax and regulatory actions. Over to you, Uday.
Thank you. Thank you, Bhavya. As you called it, this is the last over of the match. And I can assure you that India used to win. We just had a 3-0 whitewash yesterday with West Indies. So hopefully we'll close the game with winning, and we always want to win. All of us love cricket, and I think it's good that Rakesh ji started with this T20 game, which is very near and dear to all of us. And a number of speakers before put in their wisdom and thought process in terms of India-U.S. relationship, or what the budget means for the growth of the economy and what it means to foreign investors. USA has always been one of the major trading partners for last many, many years. And I just thought, rather than just focusing straight on the union budget and focusing on say tax proposals or policy proposals, let me just go a little deep dive into the history and how India has been on a forefront of foreign investment, irrespective of the government on power. India has always been a pro foreign investment. And we've seen that with the liberalization, which started with 1991, 30 years back. And I would request Rutuja, if my colleague is there, to just maybe share. I have a few slides put in. Yes, Rutuja, go to the first one. Yes, good. Yes, just, yeah, keep it here. So 30 years back, when India opened up the economy to foreign investment, it was out of no choice at that point of time. Of course, India had almost gone bankrupt with 1 billion or less than a billion in foreign reserve, hardly to last for a week or two. Today, we have $600+ billion of foreign reserves, forex reserves, and these are not hot money. In fact, those mutual funds, the FPIs who invested over years, have stayed back. But more important, a lot of FDI, foreign direct investment, has happened over years. And one of the speakers made a reference to manufacturing. I think Atman made that reference to manufacturing, and very rightly so. India has been a service-driven economy for last so many years. 60% plus of the GDP consists of service economy. And I think it's, and more important, also dependent on the agriculture. And always you wish to the monsoon god that, the monsoon is always good, and we are almost maybe still far away a few months, but June is when the monsoon starts. And last 13-14 years, monsoon has been good. So one, heavy dependent on service economy, service industry, which has also been one of the success. IT is a major success story for India. between India and US relationship, if you look at it. Agriculture, again, dependent on monsoon, done well. And now the focus is, on the manufacturing. And as we go through, a few other slides, I'll talk about it, what difference this government is making to make manufacturing possible. And here is a great opportunity, from the perspective of ally with China, the point which was made. But certainly some of the good manufacturing projects, the new units could move to India. And we have taken steps in that direction. In that light, if you look at FDI from USA has been one of the major trading partners. In my clients that I have worked in last 30 years, I can tell you easily 3/4 of my clients are US clients. Okay, so I'm just saying that represents the strength of the economy where investment from US has moved over years. It's not only the top biggies, but even the second and third, next level of companies also have come to India. And I think there is still, the relationship which can become more. One other change which has happened is whereas USA is investing into India as an FDI, the Reserve Bank of India also opened up outbound investments. And we have seen Indian companies investing back into Europe and now into USA. We also seen the reverse track. So FDI is on rise, and certainly 2021 was a good year. Half of 2022 looks good. In pandemic, the highest ever $16 billion came in 3 months into Reliance Jio at that point of time, and majority of them came from USA. Next, please. So in terms, I just want to take a little on the tax and the regulatory side of the FDI so that we complete the entire discussion. You have a direct entry mode forming companies, which is normally a preferred mode of structure for any investor, including US investor. You can invest through a limited liability partnership. Joint ventures also have been there. Most foreign investment, all the investment in most sectors are now permitted on a 100% basis. So you don't need a joint venture partner. But if you need it for local regulations, fine. But most sectors are permitted on 100%, except few where there may be sector-specific restrictions. Or if you, number of companies before establishing a full-fledged presence have used supplier, distributor, contract manufacturer by a lot of R&D companies, and outsourcing is one of the major aspects which has happened over last many years. It used to be a back end and a low end outsourcing. We are seeing a far higher end outsourcing in last few years, just because of the cost advantage, but not necessarily only cost advantage, the skilled labor, the time zone, and so on and so forth, where number of companies, and again a reference was made that Bank of America is set up, say 5,000 people, and we'll talk about IFSC. IFSC again a major initiative of Government of India, where 5,000 people back office has been set up. Next, please. Generally, the investment comes in the form of FDI, which is, I think, where we want to focus on the sectors, investments on a long-term basis. Number of FPIs have invested directly into the capital markets to make use of. Capital market has done very well over years, or a venture capital or a private equity funds have invested. And then there have been, there were specific regulations for NRIs and OCIs, no longer there, so they are treated at par with the normal FDI. But they have also invested a lot in startups. They also form smaller companies, or form LLP, family-owned businesses, and invested across various sectors. Next, please. One thing, today we are a far better situation, as I said, with the 600 billion plus of forex reserves. But when we were a billion, less than a billion, never ever in the life India defaulted on any foreign exchange payment. There may be delays which might have happened because of bureaucratic delays or controls, but always the remittances, which are always very key. India has always kept its commitment. And both, almost all the investment which flows in the hard currency from overseas, say from USA, is a repatriable investment. So you can repatriate dividends within 24 hours, just pay the tax. You can repatriate money in the form of royalties, technology fees, exit when it happens, capital gains. All these remittances are freely permitted. On current account, everything is freely repatriable. On capital account, there are certain restrictions, but even those payments are permissible, subject to necessary withholding taxes. Generally, NRIs invest sometimes on a non-repatriation basis because they already have some, some assets here or some connection, business here. Even within that, there is a very popular $1 million scheme. And I specifically wanted to talk of some of the HNIs, although we're talking on a larger Indo-American business, but those NRIs who have a pure investments, or they inherited some, asset in India, which are not repatriable because those assets came from succession planning because of inheritance. Still, there is a possibility of remitting $1 million per year per person. And I think that scheme has been very, very popular for a lot of NRIs. Next, please. I just mentioned about the various repatriation, be it dividend, share buyback has happened. Whenever there is a technology being given and people come in, the technical services, royalty, all this payments are freely repatriable. And this is very important because when you invest in a project, you earn profits, you want the money back, no problem. Unlike many, many countries, you can see it in South America, where taking money out of the country is one hell of a problem. It is just impossible. Here, it is all freely repatriable. Next, please. And within that, we have the exchange control regulations and direct and indirect. We've spoken about this. A marrying of all this tax and regulatory aspect can do a win-win situation for any non-resident which invests into India. And then the money goes back to USA. There is also any taxes that you pay in India. Generally, you will get a foreign tax credit. So through it, India has signed tax treaties with more than 90 countries in the world. And USA, it signed treaty in 1989. So for the last 30 years, this treaty is in force, under which any taxes that you would pay in India would be creditable back home. So through that, double taxation is avoided. Yeah. Next, please. Interestingly, because before I just focus on few proposals for India, if I just look at the tax rates, and interestingly, if you look at the path now, the then finance minister, late Mr. Jaitley, said on the floor of parliament in 2015 that India wants to become competitive in the world. Tax plays an important role. And as a part of this, we will reduce our tax rate from 30 to 25. At that point of time, with a surcharge, the tax rate was 35% for a corporate. USA was about 34, 35, equivalent at that point of time. India did keep, and a promise on the statement on the floor of parliament is like giving a commitment. And India did keep that commitment. In 2019, the tax rate was reduced to 25%. For new manufacturing units, the tax was reduced to 15%. See, very, very significant change. And you look at USA, we had 34, which went to 21 during the Trump regime. Now that 21 is going to go to 26.5, with the state taxes upward of going to 30. And you have 15% tax if you set up a new manufacturing unit in India. Of course, you will set up a unit because first there is a business reality and you believe that the project will make profits. Having taken that business decision, tax plays a very, very important role. So as I look, USA, close to 30% with the state taxes. China, 25%. UK, upward of 20. India of 15 with surcharge of 17, one of the lowest in the world. So this is one more enablement in addition to Make in India, making Atmanirbhar Bharat, the self-reliant that we are speaking. India does Atmanirbhar Bharat or a self-reliant does not mean that I want to be isolated from the rest of the world. India is very well integrated into the world, and as a part of that, you still want to make your impact. And this government is seeing this opportunity of creating India as a good manufacturing base, good R&D base. And that has a lot of other advantages. You set up, someone said job creation is a problem. Yes, job creation has been one of the major issues in the past. You set up this manufacturing unit, it is a long gestation, 2-3 years it will take, then you run it, you automatically create jobs. When you create jobs, then money is coming back into the economy. But just by this one tax measure, I can tell you, it can create a lot of impact. And from that perspective, the tax rate of 25% or 15% is a significant benefit when you want to set up a business in India. On the withholding taxes, again, royalty being taxed at 10%, lowest in one of, if you look at most of the tax treaties, and then you get a tax credit back. So dividend tax, which was on the company, we now moved back to shareholders. Again, India-U.S. treaty, the dividend withholding rate is just 15%. So those are some of the aspects that tax plays a very important role. And over the years, we have seen falling tax rates. Someone said in the beginning, stable and predictable tax policy. And that's what I want to come to say, that it's not only today that when you see the union budget, this is happening from 2015, which is creating certainty. When you look at foreign investors or even large domestic investors, it's not that they don't want to pay any taxes. They want certainty, and which is one thing which is coming very, very, clearly, a transparency which is coming up, be it on GST or be it on income tax. Next, please. Just next, please. Let me just come back to some of the tax proposals and I'll keep it very brief because Rakesh ji already spoke about it. So when we had no tax rate change, in my mind, it was not a surprise. Okay, just because of the falling rates. And if you look at economic survey, which comes just a day before the budget, economic survey talks about the health of the economy, how economy has fared over in this year, say 21-22. So of course, the survey came on 31st January, so result up to 31st, and extrapolate for next 2 months. The economy is supposed to grow at 9.2, 9.3%, significant. Next year, 8.5%. And when you look at the tax collections in spite of the pandemic pain were the highest. And we could see that part to see that this will not lead to any new taxes. The GST collections were 1 lakh crore a month from July 21 till today. And finance minister in the budget speech mentioned that January was 1,41,000 crore, highest. And this is only going to increase. The way GST has been framed, not only that it has increased the GST collection, but the way input tax credit mechanism is built, it is also created a lot of additional corporate tax collections, also a lot of personal tax collections. Because if you, and this is also reducing the parallel economy. And coupled with that, India is moving complete digital. So look at the entire GST model is pure digital. And again, digital is only going to be one of the key aspects. Capital gains, surcharge was reduced. That also you could see for a few days why capital market reacted, why it was reacted. Gift city is a very, very important measure. And government, and this is a city near Gandhinagar. The Indian government is trying to really promote this as one of the best financial centers in the world, like we have in Singapore or in London or in New York. India has set up this offshore center. And if you set up a unit in that center, there is a 10-year tax holiday. Very, very important. And now this year, even the International Arbitration Center is proposed to be set up to settle all the disputes. You must be keeping track. Today, there is a dispute going on between the Future and Amazon. Why do you want that dispute in Singapore to be settled? Why not in India? And I think this is a great measure. The IFSC today consists of more financial services. So banks, financial services, funds, insurance companies, reinsurance companies, fintech companies, those who want to set up unit in IFSC. And you would see that IFSC will really get promoted. It also gives 10 years tax holiday. Additionally, startup benefits, manufacturing, as we said, benefit because this rate of 15% was set up in 2019. And because of pandemic, not many projects have really been fructified. So even to that, this year's budget has extended the commencement date, which was March 31, 23 to 24. Yeah, I think maybe I have a few other slides, but we already discussed that. One more point I would make it here before I stop, that when you looked at 10 years back, and again, there is no comparison, but at that point of time, there were good tax policy statements. There was always a gap in implementation. So when it looked at the grassroots level, the bureaucracy, the tax administration played havoc at that point of time. And that's why the litigation went up so much. And when you talk to, whenever we spoke to foreign investor, the one question which will come from a foreign investor or US investor, is there any way in your country to kill litigation or settle disputes? And the answer was yes, provided the dispute did not start. The moment at the first level when you file the return, and there was a difference between your return income and what tax authorities felt was different, and it started, the fund started, it went on till at least tax tribunal or it went to court. And again, this year, that updated return initiative, it looks very small, but I'm telling you, it will have a huge impact. By chance you forgot to, put your, genuine income, then you are killing the litigation before even it is begun. So the tax administration has been liberalized significantly, litigation is reducing, and you are seeing more and more confidential measures from the government. So the gap between policy and implementation has reduced significantly. Transfer pricing disputes, which are whenever a transaction between the group companies happened, were huge, which again have gone down. So all these measures put together, the government is saying, look, we are trying to reduce disputes. There was a tax amnesty also, which came to tax litigation settlement scheme. You as an investor also come forward in the falling rates. So want to make a tax law simple, falling rates, and removing all those unnecessary incentives and exemptions which are given. So make it simple. Focus on your business. Thank you. Bhavya, I'm done with it because I can go on and on, but I thought I was on the last ball of the match now.
Thank you, Uday. As we know, the last over in T20 is also one of the most critical overs. So I will stay there. And thank you so much for sharing the super critical points, on the tax and also the various regulations for NRIs, for international businesses, which are extremely important for India and for the world as well with India. Moving on, I would, I know for everybody who's joined us from India, it's getting pretty late. So we'll perhaps have a smaller Q&A session. I would request, all the attendees who would like to ask questions to our eminent panelists and speakers to please put it on in the chat, and I could pick it up from there. And to start with, I do have, some questions which have been, shared across. And I would request, request the speakers to please, volunteer, wherever you like to answer these questions. So, the question number one is a very, very important one, and which is, are there any tax tips? Tax tips for OCI holders here in US, which you would like to share with us?
Tax tips, okay. Interesting. I think first of all, a lot of NRIs or OCIs who have invested. So there is no specific, there is a specific tax regime, concessional rate for NRIs and OCIs, which were there for dividends and capital gains, which has now been done away with, because the tax, domestic tax law itself has withholding taxes which are minimal. So if you have a capital gains, it is generally 20%. If you invested in a listed company directly in a stock market, 10%. A lot of NRIs who invested either through remittance or number of people got, as I said, because of succession, had not disclosed those. Many of them are not disclosed. As a OCI, as a US citizen, you are taxed on a world income, which also includes the Indian income. Okay, so those kind of disclosures under, particularly after FATCA, are very, very important. And that's why you're also getting the benefit of the tax treaty. But I would say the falling tax rates is a great advantage. There is nothing specific. Invest in the funds, the shares, stock market, where the tax rate is just 10% compared to other assets where you put in. And I'm right now focusing on the passive investment, where the rate is 20% plus. So if you're investing in a listed company, the gain after just 1 year is, you just pay 10% tax, and with surcharge, it can go a little higher. So, and that also gives you a lot of, the returns today. The investment in capital markets is pretty good. And if you keep it invested, which even applies to domestic investors also, people, rather than putting money in properties today, those put money more in the capital markets, which is bringing more return at a very concessional rate. Whether the highest rate can go up to 43%, this could be just 10%. So other than that, the rates are all same, the falling rates. And I think the key part is the disclosure in your return in USA, which number of NRIs we have seen have not done it. Yeah.
Right. Thank you. Thank you so much for the answer. I would like to, apologize to everybody that we have shot up on our time, and thank you so much for being so patient with us. All the presentation of the speakers were, very, very interesting, and I know that it was 10 to 12 minutes for a very, very short time for each of those topics. Moving on, the next question that I have is, what is the view on fintech being perceived as the emerging area for the Indo-U.S. partnership and collaboration as we move forward? I would request the speaker, to kindly take it up.
Well, thanks for the question. Thanks, Bhavya. I think the short answer from my perspective is there's a lot of enthusiasm and excitement to work with India in the fintech space. It's part and parcel of the top level's emphasis on digitization. As our speakers noted, the budget has really emphasized digital technologies as really the center and critical to India's economic future. I think there are some issues that need to get resolved over time that have to do with the free flow of data, the movement of data, and some of the e-payments companies in the U.S. space, most prominently Visa and MasterCard, they've encountered some challenges there, but those should be worked out over time, and I think the prospects are very encouraging to do more in the fintech space over the mid to long term.
Thank you.
I'll just add one more point, Bhavya, to what Atman just said, that fintech companies are now going to be allowed to invest in IFSC. And if you set up a unit in IFSC, you have a 10-year tax holiday. So it started with only banking companies, insurance, reinsurance. Now the IFSC has recently also added fintech companies to be set up shop in India. So any US company setting up a unit in a normal India would be taxable at a normal rate. But if you set up in IFSC, you have a tax holiday for 10 years, fully exempt. Additionally, because the entire ecosystem in IFSC is all finance companies, banks. So you also have a lot of that synergy to work together. And most important, I think I mentioned, the IFSC unit is treated as a non-resident for FEMA purpose. So as good as you are in Singapore or in New York, all transactions permissible in foreign currency, in hard currency. And with a 10-year tax holiday, it can have a great advantage.
Thank you. Thank you. This is very important. Thank you. Abha, I see. Will you like to
I just wanted to say, when we look at all the innovation that's actually coming out of India, a lot of the innovation happens to be in the fintech space. What is fascinating to me is that a lot of the innovation that's coming from India is actually being done for American companies in India. So I do honestly believe there's a tremendous amount of potential, and especially with the digital currency and VDAs, where India is, really taking a position in the front. I think this area is absolutely ripe for a lot more work and a lot more investment in.
Thank you. Thank you. In the interest of time, I would be perhaps taking the last question for the day and for the evening, respectively. And I request, everybody, if the attendees have more questions, please do feel free to share it with ICAI, DC, and New York. And we could perhaps request our speakers to, answer them separately. The last question, as it is about a tax withholding at source and tax resident certificates for NRIs, foreign and corporates. If you can just let us know a little more on that and the important points.
Shall I take this up or somebody else? Shall I take this up?
Please.
Yeah. No, so Indian tax law has a provision that before any payment is made to a non-resident, there should be a necessary withholding to be performed by the person who is making the payment. The whole objective is to say that once the payment, the money goes out of the country, then you have a little control over it if that income was taxable. So this is Section 195 of the Income Tax Act. In that situation, depending on the nature of remittance, there is a withholding tax. So assuming it was some technology transfer and the royalty was earned, there is a 10% withholding tax. If it is a dividend being paid for an investment which has been made by a company, the withholding is say 15%. If an individual NRI has made again the investment, or say a property is sold, NRI has a property or a OCI has a property in India, which was inherited and it was sold, there is a 20% withholding. So the withholding tax obligation has to be done by the resident, and there is a process under which either you go as a resident, as I said, the obligation is on resident to obtain the tax order from the tax authorities, or you can freely repatriate through what is called the chartered accountant certificate. Generally, most of the remittance, most ordinary remittances go through the chartered accountant certificate. There are certain forms, and then once you deduct the tax, there is a withholding tax certificate, like you do a K1, income or something in the US. You give a Form 16 specific withholding certificate back to that US resident or an NRI. And when that person declares the return in the US, whatever is the tax liability, again that you get a tax credit. So withholding tax credit is available because it is issued, and now everything is online. Everything is online. Previously, we had to sign all physical certificates. I'm saying in that sense, India has really gone digital on everything. So you give that TDS certificate, that also absolves the resident from a withholding liability, and a non-resident or an NRI gets, and then there are certain withholding provisions more for immovable property to track, but the tax is generally 10 to 20%, depending on the nature of income.
Thank you. Thank you so much.
Happy to answer if there is any specific questions later, when you get any questions, happy to answer it in detail.
Sure. Thank you very much for that. We'll certainly make use of the offer.
Sure.
I did mention that this is the last question, but the last question is now coming in. Mr. Basant Kumar Dugar from Bangkok has asked, to share some views on whether India can make and declare USA as the most favored nation.
So the last question is also on tax. There is a concept of a most favored nation under the taxation, under the international taxation agreements, the double tax avoidance treaty. What that concept says is that, say, withholding tax under a US treaty is, say, 20% for royalty, and India entered into a treaty with any other tax treaty country. And this has happened more in Europe. So My short answer is I don't think USA will be a most favored nation clause. USA will never agree. Just to explain the concept that India entered treaty with Netherlands, where the rate was for royalty was reduced to 10%. If you are a most favored nation clause in your treaty, then the 10% rate automatically applies to you. That's the concept of a most favored nation. But India will never sign it, and I don't think the USA will accept it either. That's my view.
Thank you. Thank you, Uday. This was very informative. Thanks for sharing your views. As we come close to the, to this day and evening on the very, very interesting discussion around the budget and the Indian and US economy and partnership that we've had today, I will request, Mr. Shivinder Sofit, who's a chartered accountant and a CPA and partner at Goldfine and Company, a boutique full-service CPA firm in downtown New York, and also member of ICAI New York chapter, to please come and extend vote of thanks for today. Shivinderji, over to you.
Hello, Bhavya, thank you. First, thank you all for joining and for giving. I see Dr. Ravi Kota and the Jaiswal are not here, but Vipul Devji is here from the consulate. So thank you, the embassy and the consulate, for helping us not only with this event, but also otherwise. I'm also, Bhavya is the secretary, and I'm the president of the GoPio Manhattan chapter. And we keep on doing a lot of community events with the consulate here. So always thank you Vipulji, for that. And Dr. Rakesh Gupta ji, thank you for joining us. You are a direct tax guru, and lately you are becoming more as a Hindi poet friend, so we enjoy that. And Vishal ji, thank you. You are our GST expert and a CA community leader, particularly mainly in North. You have helped on many issues when it comes to the CA community. So thank you for all the support. And Abhishek is a legal expert on tax and other corporate matters. He's representing big US companies on various matters, and we look forward for your help on this for the Indo-U.S., streamlining the Indo-U.S. businesses. And Atman is at Albright Stonebridge. We all know what Stonebridge is doing, and you are focusing on South Asia and India. So your help is critical because you are making it work at the corporate level. What we are trying to do at a personal level, at a community level, at ground grassroots, but you are making it happen at the corporate level. You're taking this relationship to the boards. So because you guys are representing, I will not say big 500, you may be representing all the big 10 even. So not taking any names, but great. Thank you for doing all that. Abha, whatever you have done at Vanguard earlier as CIO, and now you are doing it in various board roles in breaking the glass ceiling and bringing diversity in profession. Please keep up doing the good work, and we look forward for more association with you in doing that, because we have many CA fraternity has seen CAs, CPAs. We always have that challenge of diversity when it comes to women representation. So now we have more and more members coming in. So glad you will be able to guide and nurture and mentor many of those.
Thank you.
And Uday is a partner at KNAV Group, which is a global accounting firm. They have presence in US and other countries, India, US, and a few other countries. And he's helping clients in US and India. Individuals, as he mentioned, HNIs and the corporates. Thank you for staying so long and really helpful, thankful to Pratuja, which she stayed for so long to help with the presentations. Even we said that we can handle it. She said, no, I will stay there. Thank you for that. And thank you to ICAI DC chapter, Gokul and Kalpesh Bhai and Praveen ji and Devi, the new team which is joining. And from New York chapter, some people are there in there. Gagan, I think, got dropped off. Thank you everyone to do this, and we look forward for this. This is not even that we are just, it is not a one-way street. It has to be a two-way street, and it has to be an ongoing process. So everybody has the contact information, and feel free to reach out for anything. And it is a collaborative effort, and we are representing India in our own way. Everybody is ambassador in their own way, in our own communities, and wherever we are, we have to keep up the flag of India and make our own march. With that said, thank you all for joining, and look forward for this journey on this. Thank you, Ji.
Thank you, everyone.
Thank you, Shivendra and Bhavya. Thank you, everyone.
Vipul ji, you like to share anything from the consulate side as a closing remark?
Thank you all. Thank you,
Shivendra ji, I think.
Thank you, Janta.
Thank you. You are welcome.
So it was a very fruitful discussion. I hope that all the listeners, just like myself, they learned a lot. And we look forward to more such, meaningful and fruitful discussions in the future as well. Thank you so much to all the panelists, and thank you so much to all the listeners and people who joined in. And just have a great weekend.